Hello, folks. Welcome to this week's Forex commentary. And how do you do? So last week we were talking about dollar index. I think we did a pretty good job in determining the draw on liquidity last week on DXY, and we're gonna do a recap when we go into those time frames. But first, we understand that the first half of this year is gone, okay, and we just have today left in June, and it means July is this week, that's tomorrow, and we're gonna have like a new monthly candle and all of those stuff that follows, the trading of a new month or a new quarter and stuff like that. So that's why I'm on the monthly time frame, not because of any recap, because I think we did a recap last week and we discussed what we wanted to see, how we wanted to see what we wanted to see on dollar index. And it was very, very interesting because the market, panned out, just like how we discussed. So now today, we want to determine the next draw on liquidity and why we think the markets are likely to trade in that direction. Okay, and that being said, okay, I showed up this fair value gap here because I think chances are this monthly candle is going to close below this fair value gap, so this becomes an inversion fair value gap. So mind you, I'm making this analysis with the context that we're likely to see this candle close below this fair value gap here, okay, and when we see that happen, okay, the idea for next month's trading is we want to see if the markets can sort of like make a retracement into this level here. Okay, that's the idea, to see if markets are going to be willing to make any retracement. And when markets make that retracement, we begin to overlap levels on probably more subordinate time frame like the daily and the weekly chart. Okay, because just for reference and to manage much more lower time frame expectations like the daily time frame. So the draw on liquidity here, I think sell side here, because we have a swing low here prior to all of this expansion, and we have some sort of like an old inversion level here. Okay, so we have an old inversion level here, we have sell side here. So this seems like the obvious draw on liquidity because the market has successfully redistributed below an old low here. Okay, I think last year in one of my commentaries I was talking about things that could happen above an old highs and below an old lows and stuff like that, because just the way we look for accumulation below old lows, like accumulation and reaccumulation to discount, we could also look for redistribution again, because if market or the draw on liquidity is still bearish below an old low, markets will likely consolidate. And earlier on I was thinking that this was an accumulation because of the high time frame institutional order flow is bullish, which is still bullish on dollar index, but I think these are periods when the draw on liquidity is opposing the high time frame institutional order flow. And these are scenarios we talked about in the mentorship when we were dealing the qualitative analysis, saying that periods when the markets will move opposing the direction of the high time frame institutional order flow. So and that's why we try to separate what draw on liquidity is, because that's more of like the qualitative analysis. You can define where the markets are going without need for data and all of those other confluences on the fundamental level or on the basis of the fundamental analysis. Okay, so clearly we see DXY trying to reach for some opposing level of liquidity, and we have sell stop here, because after taking sell side here, I mean the only logical price point DXY would be willing to reach for liquidity would be here. That's 94.629 And you know, like I said, we have some, you know, old fair value gap here. If you take it forward, let me just have this one put here. I've had to put it here before. I mean, that was 3 commentaries ago. I was talking about now that I am trying to adjust to a bearish dollar. I was trying to look for levels that I can use to validate, you know, the draw on the equivalent dollar index, and I, you know, drew out this level here on the XY. So it seemed apparently that we're going to see the market straight here into here. So this would be like my primary objective here, and you know, see if the markets can, you know, get down here for sell side. Okay, so because if the market gets here and I'm on the setup, you know, I have to collapse the majority of my positions here and see if the markets can get down to sell side. So yeah, so we have this inversion fair value gap, we have a strongly bearish dollar, okay, and we have this previous monthly low here. You can see this is why this level is going to be key, because of we have an old low here. So an old low, when market straight below closes below, it becomes new premium array. Okay, this becomes a premium array, and we have another level here overlapping, so it makes this level kind of like significant. Okay, so on the weekly chart, last week I was talking about, you know, say if there's any magic dollar index is going to pull, it's going to be from last week. I mean, for higher dollar prices. Okay, but my commentary last week was, you know, we have an order block here. This 1, 2, 3, 4 candles. We have an order block here, and we have an order block, and we have another candle trading into this consecutive octave candles. This is the propulsion block. So I was talking about how, you know, what I wanted to see is, you know, some relatively equal highs here on the weekly time frame. It's much more obvious on the daily chart, and we want to see market sweep it. Okay, so that was the whole idea on the weekly time frame. And of course, you know, the markets run buy side liquidity here, and you know, achieve a closing basis we kind of like anticipated on the daily chart for lower dollar prices. And you know, that's, you know, how the market delivered last week. And I know quite last week was quite online. I was, you know, taking the back seat from, you know, trading basically, and towards the later portion of last week, you know, had to, you know, celebrate my birthday, you know, just chilling and stuff with friends. You know, it was just so good and refreshing anyways. I've been screaming to my friends that I needed to rest for a bit, and I think I had so much of that rest last week. So this week, you know, that's when I'm gonna do lots of, I think, trading. If price action is, you know, much more willing, at least for me, because it's all perspective. So we have that old monthly low here, the one that qualifies as a premium, a new premium array. And someone's wondering what's 96541. You know, just to manage, you know, expectation, especially, you know, with the intraday price action. You know, there's a tiny fair value gap here. There's a tiny fair value gap here. If you look closely, there's a tiny gap. So you can see this fair value gap here, and you can see this candle here is the order block. Well, since markets traded here and reaccumulated here, so this is like a low resistant liquid run signature. So I'm not exactly worried as about this order block, so long we stay below this previous monthly fair value gap, or this old monthly fair value gap. So that's the idea. And last week we seem to have created some order block again inside, like this up candle trading into this consecutive upwards candle. So we want to see if the market can get up here and begin to spool to the downside. Okay, so that's the whole plot for this analysis. Bearish DXY, one-sided DXY. It's all bearish beyond reasonable doubt. I mean, it's obvious the markets are trying to reach for some level of liquidity, and we are going to trade in that direction, of course. So here was last week's trading when we were talking about buy side here, and saying if the market show willingness to close, or if the market closes below this gap here and this gap here, we'll be looking for downside. And as soon as we achieve this closing basis, it was all fun, it was all good, until we started to have gaps, and I lost interest in shorting dollar last week, because I managed to develop a bias that was going to be bearish, and I think I wanted it easy, and since the markets don't care about me, I just just exit and stuff. So yeah, relatively equal highs I was taking buy side, and we have this gap here, and you can see tiny portions of gaps, like we have a tiny little one here, okay, and we have this level here, this level of resistance here, like some breaker mitigation block and stuff, and we have huge gap here. So it's huge gap. Although if I want to make reference to a breaker, I think it's going to be around here, because we have a down close candle, we have an up close candle prior to a run on liquidity here, okay, like we have a low, a lower low, and a high, like a high here, and the market closes bearish. So the breaker is going to be around here. So this week we want to see if the markets can make a retracement into the range, okay. So that's the first thing, because a new quarter would why am I calling July a new quarter? A new month will begin tomorrow, and it's the start of a 6-month candle, and it's the beginning of a 3-month candle. So and that's why I'm thinking that when the monthly candle closes, the new monthly candle has got to project its high of the new month and stuff. And we're gonna see how the market trades. I don't know, something is going through my mind, and that's why I'm quiet. All right, so that's the whole point of this analysis. We want to see if markets can make a retracement, because we have levels on the high time frame that markets can, okay, or the markets are likely to trade into, which is this monthly level overlapping, and we have a gap here, and I'll see if they can get up to this upper gap, because this is a huge gap. There's no trading, absolutely no trading between these candles low and these candles high, so there's absolutely no trading. So there's a possibility that we see the markets, in fact, get up to here. Okay, let me have it here, let me have it here, so I don't so I'm leaving this one here, because this is most premium inefficiency in this dealing range between this high here and this low here. So this is huge inefficiency. So I think if new monthly candle would want to trade, I think there's level of obligation it has to rebalance inefficiencies at least. So I'm thinking markets would trade up here, and begins to spool into downside here, and the weekly or the monthly objective here. So it's all straightforward and bearish for DXY. So EU here, EU keyed off of this consecutive down close candle, which is the auto block. I was pointing out this auto block last 2 months, but I was not convinced enough that we're gonna see EU bullish, because there was nothing to validate a bullish EU on the basis of fundamental analysis. But Now it's clear the draw liquidity here is this monthly fair value gap. I think EU is going to even go through this monthly gap, but let's stay within, you know, the confines. I don't know how expansive this month is going to be, because if we're seeing very heavy expansion this month, you know, we're likely to see EU run above this, you know, highs, because this highs low resistance liquidity run trade into here, high res, mitigate, low res, and we have a huge imbalance here. So this would be like some crazy manipulation when market trades up here into this imbalance, and then we can, you know, see what happens here. The high time for market structure in EU is, you know, is bearish. So if you are looking at EU from the perspective of high time for market structure, we see it's bearish, and this is, you know, high time from institutional overflow. So this would be like a run above some relatively equal highs first, but that will be later analysis. But just so you note that I think beyond buy side here, I think markets could potentially trade into this premium fair value gap, which is insane, because I don't know how long it's gonna take EU, but it looks very, very likely to do that. But first, we want to focus on this next pocket of liquidity here, this fair value gap. So you can see it's an old breakaway gap. Okay, market failed to return. You can see markets fail. Oh, there was a tiny poke. Wow, there was a poke here. It seemed like there was nothing. Okay, so what the whole point of zooming in. I don't know if I saw it differently from another market. Okay. I think EU trade into the monthly fair value gap, some sort of institutional order flow entry drill into this gap. So now that we're seeing the draw on liquidity here, markets, you know, needing to rebalance inefficiency. Okay, I was seeing the possibility that markets, you know, trades above, you know, these highs on the monthly time frame, so makes this draw, you know, valid. So we want to see markets trade here and completely rebalance this fair value gap. So that's your point. So we want to see markets trade into 19087 through to 1986. Okay, so that's what we want to see on Euro USD. And on the weekly time frame, we have much more premium fair value gap above this consolidation here. Okay, so this one is clearly a breakaway gap. So there's been an old fair value gap here on EU, something I overlapped for a level for support, because we have this down candle, we have this candle's high, and we have this old gap. So we want to see if EU is going to show any willingness to make a retracement. Okay, and the retracement on the daily chart could actually extend even much more into a discount, but I really do not know yet. Yeah, it all depends on how DXY closes today, how DXY begins to trade tomorrow, and then we can determine, you know, if they are even willing to make this sort of retracement I'm thinking they should make, right? And yeah, that's pretty much it. So GU, you know, I'm saying this discount fair value gap on the daily time frame. This seems like a valid level for a retracement on GU, and you know, when so then, you know, begin to look for longs on GU from the discount fair value gap. GU clearly bullish, consolidation, premium gap. So I'm looking for buys into this fair value gap here on GU. Okay, and yeah, ultimately on GU, you know, GU looks extremely bullish, and with this highs here, I think, and you know, you can see we have the monthly order block here, market respecting this order block here, the change in state in delivery and closing bullish. So this monthly candle is likely to stay bullish, and levels, once this monthly candle closes bullish, would be the previous monthly high. So if G is gonna think of making any retracement at all, I'm gonna be looking at the previous monthly high. And if we go through lower time frame to see where that falls, okay, you see it's this consolidation here. It's back inside this consolidation. And on the daily chart, okay, you can see how we developed this level here, this candle. So it's previous monthly high, and there's a daily fair value gap here. So that's what I'm using to manage my expectations. So I was looking at the previous monthly high, looked like daily fair value gap, and I qualified this level to be a suitable level for a discount when GU tries to make any sort of like retracement. Okay, and I did some analysis on USD last week, and obviously this week I'm bearish on USD for many reasons. Okay, because number one, I'm very one-sided bearish on dollar index, very one-sided and bearish on DXY, and on the weekly time frame, last week I will use the weekly chart. Okay, you'd see that there is this volume imbalance and market has been consolidating around this volume imbalance. And last week, markets traded through, run above previous weekly high here, traded into this premium level and closed inside the range of this weekly candle, which is a green candle. And we're talking about periods when DXY is now one-sided. I mean, one-sided for the fact that DXY is bearish. So it's obvious all of these levels here are too clean. Okay, these levels are too clean on USD and in fact the market is already expanding from the levels I determined during the weekend. So I want to see USD run liquidity here, and likely runs liquidity here. So, and how did I determine here? Okay, you can see this up close candle prior to this candle's closure. That's a change in state in delivery, and markets trade inside it, forming a propulsion candle, and Thursday's trading just close bearish, which is sponsorship off of where this auto block. So when I saw Friday close bullish but still inside here, I know it's Friday, so you can see all of this expansion from Monday up until Thursday's trading, and Friday would likely just return back into the range and stuff like that. So there's a very high tendency we see the market respect this propulsion block. So, and I think that's what the markets are currently doing. Okay, same market respect the propulsion block. I think the only thing I would be looking for here on USD would, you can see here, you can see this high here. Let me take this one off. All I need is a level on the hourly time frame to engage. Really, you can see we have this here. Markets run liquid here. We can see this upwards candle. Okay, when this candle closes, okay, that's a change in the state in delivery. Okay, and we have a green candle here. Let me check this candle on some other brokerage, because these brokerages are going crazy. Okay, it's the same on Honda and forex.com. Yes, you can imagine it's kind of like different forex.com, and it should create some sort of inefficiency. Let's see, fixing inefficiency. Okay, so this was a gap. The market completely closed the gap, then delivered downside. All right. So now that we have the change state in delivery on USD I think what makes sense is any sort of retracement back into the range on USD that would be a valid short on USD and my battery is low, although I just plug it in, and we're gonna see. I'll see how market trades really. But once I get a retracement in USJPY, I'm likely to go short. I want to call out this level here. I'm gonna call this one out to see if the markets can trade into this premium here. Okay, I'm gonna call this one out, but I'm not sure if the markets will make that retracement. But I'm still gonna call it out regardless. Okay, because now that we've had lots of expansion overnight, that's during Sunday's trading. I don't know how much London would want to make any retracement. And now that we've trying to sell side in previous days low, I think they might be willing to make some sort of retracement, and then we're going to capitalize on that. So until I see you in the next one, be safe.